Just before we start, we would like to acknowledge the traditional owners of the country throughout Australia and recognise their continuing connection to the land, waters and culture. We pay our respects to the elders past, present and emerging. Day 4 of Blockchain Week is brought to you by our friends over at BTC Markets. If you've been inspired at all throughout this week and want to participate in owning some Bitcoin, owning some Ethereum or top DeFi protocols, you can go check them out. They're an exchange that will be able to trade your AUD over to Bitcoin or Ethereum. This session in particular is brought to you by Mycelium. Again, if you've been inspired over the past week and are eager to find a career in blockchain, feel free to go over to mycelium.ventures, check out their career pages and see if there's a right fit for you. Thank you for tuning in. This is episode 4 and it's called Decentralized Corporate Credit, featuring Sidney Powell. My name's Jack Magnusson. I'm the co-host of High Definition Podcast by Koji Capital, both of which are very crypto-centric. And joining me today will be, Sidney Powell, CEO and co-founder of Maple Finance. So Maple Finance is pretty much a decentralized protocol bringing under-collateralized corporate credit to Ethereum. So just as Sid and I go through this conversation, if you have any questions at all, just chuck them in the Q&A box down below or the chat, and we'll get to those at the end. Sidney, great to have you here, man.
Thanks, Jack. Really pleased to be here. Thanks for having me on.
That's all good. I guess we should just start off with a brief intro of yourself and your experience in Ethereum.
Yeah, terrific. So to take a step back, I came from a background in traditional finance. So I used to work in commercial banking, and whilst there, I was doing mortgage and asset-backed securities. So I would help lending companies predominantly to raise debt capital so that they could reinvest in the growth of their business. So I was doing that for a couple of years. And then I went and joined a commercial lending fintech and helped set up their securitization program. And it was going through that process of setting it up that I encountered the pain points of raising capital through traditional financial means or traditional financial markets. So this involved fees, third parties, sort of lengthy delays. And it was around 2018 that I started thinking about how, with debt, that it's a series of sort of if-then conditionalities. And I started learning about smart contracts and thinking, was there a way that we could kind of reimagine capital markets in a more efficient global first way by building on top of the Ethereum blockchain? So that was what started to get me to go down the rabbit hole. And then when you fast forward to about 2019, I started to write a white paper and then progressed, tried to build out my network in the space. We were able to sort of build a very basic proof of concept in 2019 that was doing sort of tranching, similar to my background in securitization. And then it was around mid 2020, as the DeFi summer started to take off, that we were able to then raise capital, and I was able to go full time on Maple. And since then, I've just been building out the team and building up to launch.
Right. And yeah, I guess over the last couple of years as well, we've seen an incredible growth, especially in Australians contributing to the space.
Yeah.
So just outside of Australia alone, we've got obviously Maple Finance, you've got MStable, you've got Synthetics, Immutable X, and I mean, the list keeps going. Maybe it's a bit of a pie in the sky question, but why do you think Australia has such a vibrant crypto community?
I think in Australia's case, there's a few unique circumstances. So I think you've got to have basic preconditions to enable this. Then there's a cultural element, then there's a people element. So the basic preconditions are that Australia has, a high standard of living, high standard of education, and a relatively, affluent society with disposable income. So those are basic preconditions that then enable people to focus on more entrepreneurial ventures. So then you've got kind of the cultural elements that sit behind that. So I would say we have a little bit of a frontiers mindset. We live in a fairly rugged environment, and that sort of fostered a spirit of, being quite adventurous, being quite entrepreneurial. Yeah. So that's kind of the first element of the culture. The second one is actually seeing other people who have done it. So once you had the first successful founders come through, then you have the network of people who can provide advice, people who can provide access to fundraising, and and also recruitment and building teams who are that sort of first crop of successful founders, and they then create a network. So I think it's not uncommon that a lot of inventors and innovators, had encountered earlier in life other inventors and innovators. Like, I think it really creates a positive feedback loop that we're now starting to see in Australia. And then I think the other element is, if we always had that culture, why are we so successful in crypto? And I think the fact is that crypto is kind of sits on a global stage. So if you try and build another Web 2 product, well, you're actually kind of geographically limited. But with crypto, you have access first and foremost to global talent. So Maple's a distributed team. Then you've got access to capital from overseas as well, from VCs and other investors. And then you've got access to global markets because, the Ethereum layer is global. It doesn't favor any one country. So I think those are the elements that have favored Australia in establishing, almost a new kind of crypto Silicon Valley here.
Yeah, definitely. Yeah, I guess that definitely brings me to my own conclusion, which is, Ethereum is completely decentralized in the fact that it doesn't really matter where you are in the world. As long as you have internet connection, you will be able to, be a part of it and contribute to that, which is really cool. And that's obviously what Maple Finance has done. So maybe just going into Maple Finance a bit more. What is Maple Finance?
Yeah, so what we are is, as you said, we're a decentralized protocol. But maybe to dive into that a little bit more, we're a decentralized marketplace for institutional growth capital. So our thesis is that the crypto native economy, is going to be many times the size that it is now. We've already started to see the first crypto native institutions emerge who have found product market fit. So they have rock solid balance sheets, they have impeccable reputations, they're cash flow positive. These companies come from the sort of subsector of being market makers, trading funds, exchanges, crypto miners. So they're going to need capital to reach the growth potential on their current trajectory. Now, they can't currently access it from traditional finance, and then their options among centralized lenders like, say, Genesis and BlockFi tend to, by and large, be over-collateralized. Now, this isn't really conducive to reinvestment in the growth of your business. So we believe these companies are the future, and so we want to help enable them to borrow more capital efficiently, so under-collateralized, from the DeFi ecosystem. And the way that we actually facilitate this with Maple is that we have liquidity pools. So these are pools of capital from which the institutions can borrow. What we do differently is that we have a role called a delegate, and this is going to be a fund or other industry professional who assesses the borrowers and then agrees to the terms that the borrowers propose. And so they do that in exchange for a fee generated through programmatically through the protocol. And so therefore you've got these kind of three participants. So you've got institutional borrowers who want to reinvest in the growth of their business coming from the crypto space. You've got the delegate who assesses and accepts the loan terms proposed by the borrowers. And then you've got liquidity providers who are earning a yield from those capital pools. So, but then what's really interesting about Maple, and this gets to kind of the decentralized element, is that we have the native governance token. And so this is used for governance voting and putting forth proposals to the community. But then it's also actually used to, in a participatory way, to allocate risk and to align the incentives of the participants on the platform. So the way that that works is that the Maple token can actually be staked to any one of the liquidity pools on the platform. So you can think of the pool, the pools could pursue different lending strategies. And by staking the Maple token along with stablecoin, what you're doing is you're providing a reserve, a subordinated reserve to that pool, which is available to cover defaults, if there are default losses, if there are defaults on the loans within that pool. So it provides a kind of risk allocation away from the liquidity providers in that pool. And in exchange for doing so, it receives a portion of the yield in that pool.
Right. So when you're building out an under collateralized lending facility on decentralized finance, what exactly is that future that you're betting on with Maple Finance?
Yeah. So again, it's that the crypto native economy is going to be many times the size it is now. And to meet these companies that are building into the future, you have to go and meet them where they are. And so they're all, dealing with crypto assets, digital assets. And so what we're betting on is that they will want to tap into a global capital market in order to finance their business expansion. And so that's what we're betting on. And then we're also betting on the trend that increasingly commercial activity will move more and more onto the blockchain because of the efficiency of settlement, because it provides global access, and because the user experience is just gradually going to improve over time. So we want to be at the forefront of supporting these industries. So again, first off, it's trading funds, market makers, exchanges, miners, but increasingly there will be, fintech lenders, there will be e-commerce and SaaS companies, particularly now that payment rails like Visa and PayPal are starting to accept and settle in crypto as well. It's only natural that as more of their revenues begin to be denominated in stablecoins and other assets like this, that it will make sense to, to support their capital with borrowing through, a platform like Maple.
Definitely. And I mean, while they're both, still quite relevant, what would you say the key difference is maybe for one of these crypto native protocols to be lending from Maple Finance, a public blockchain, versus the legacy system?
So I think probably a good way to compare the legacy system is almost like you've got a railway network across a country, except between every different state, it's the rails are kind of like a different gauge. They don't talk to each other. And so you just have huge inefficiencies as you move between sectors and between each different provider in the supply chain of global finance. Whereas on the blockchain, on Ethereum, the money that sits in the wallet, the loan contract that actually governs the loan, the infrastructure that manages and reports on the loan, up to the cash that ends up being provided to the borrower, all sits on a single layer of infrastructure. So it's inherently far more efficient and it's global by nature. But then the other elements that are actually really, really important to the blockchain are that because it's programmable, you can actually align the incentives of participants. You can transparently see performance, which leads to improvements like price discovery. And then you can actually see the allocation of risk, and then you have inherently global distribution. So if you're a company that's looking to raise debt to finance expansion, well, you can actually tap the global capital market instead of a very balkanized, small, small region.
Right. Yeah, that makes sense. So it's an increased availability of data and also the modularity of it as well.
Yeah, so it's it's global access. It's transparent performance, so you can actually build up a track record, which leads to better, better price discovery and better terms over time. And then it's the fact that you can actually, if you're a participant from somewhere in the world, you can actually see how the incentives are aligned. Because, for example, on Maple, you can see the size of that reserve. You can see the fees that go to the delegate. You can see the size and performance of the loans in the pool that you are part of. And then you get the extra liquidity and composability of the product, because then you can use it as like collateral elsewhere. You can,
the list goes on.
The list goes on. But yeah, that liquidity element is extremely important, because you could see the performance of one pool deteriorating and perhaps you want to hop into a different pool. You can do that within 5 minutes. Imagine trying to do that in traditional finance.
Yeah. And also on decentralized finance, Maple isn't the first one to do this in terms of lending and borrowing facilities. You do have Aave and Compound. So I guess what's the sort of market space that Maple's trying to differentiate themselves into?
No, that's a good question. So Aave and Compound were definitely very early movers in the space. And so where they tend to sit is, one, they're probably more money. I know, Compound certainly classifies it more as a money market type protocol, because the loans are inherently over collateralized. It's like put in $150 worth of collateral to borrow $100. So it's not necessarily lending, in that there's never really any credit risk assumed on the protocol. And from a business purpose perspective, it's not really you're not really borrowing on there to reinvest in the growth of your business. It's more borrowing for speculative purposes. Whereas the type of product that we're providing on Maple is certainty. We're looking for a capital partnership with the borrowers on the platform. So they get fixed terms, fixed interest rate, fixed dollar amount of collateral, which compares differently with Compound, which would be, over collateralized, kind of infinite term, variable interest rate. Aave has the ability to do fixed rate, but otherwise it's largely the same.
Right. And Aave, similar to Compound, is also an over-collateralized system as well.
Correct. Yeah. Aave is also over-collateralized. They do have the credit delegation vault, but that's more of a single peer-to-peer loan where you would need to choose one sort of party to borrow under collateralized from. Whereas I would say what Maple is targeting, we're targeting institutional borrowers. So borrowers who can, put their reputation behind a loan, will KYC themselves, and they're using the loan for business purposes. So to reinvest in the growth of their business. And that's why the loan needs to be under collateralized.
Yeah. And I guess that brings me to the next question why has under collateralized loans and lending been such a big problem space for crypto, and why is it so hard for crypto to tackle that space?
I think the difference with why under collateralized lending has taken a long way to catch up is because I think people started by focusing on individuals rather than focusing on institutions. And so with individuals, you have the inherent problem of everybody being pseudonymous. And then, it's just not that efficient to run a lending program where you're lending, $500 at a time. Whereas with institutions, they put their reputations behind it. So they're always going to be known. They're borrowing in larger amounts, which means you can afford to invest the time in upfront due diligence, putting in place an appropriate sort of legal structure, like a master loan agreement. And then they have an inherently lower credit risk. So corporates and institutions, like the historical sort of borrowing default rate is probably something, sub 2% or sub 1.5%. Whereas for an individual, it's probably going to be more in the, the high teens percentage. So it's just it's a riskier class. But I would say, why has it taken longer to catch up? Well, because the space needed a bit of the Lindy effect, where you had these institutions needed to build up a bit more of a track record of performance and to build up their balance sheet strength and grow in size as the industry has grown, so that they are better, more reputable borrowers, and that there are just more of them to participate.
Right. And so in the Maple Finance ecosystem, it is the delegate's role to determine the creditworthiness of a potential borrower.
Yes. Yeah. So we've moved away from the idea that it needs to be some kind of trustless determination of whether a borrower is creditworthy. That may come down the track as credit scoring tooling becomes improved. But the pool delegate is bringing expertise to assessing institutional credit and determining whether they want to approve a loan that's as proposed by the borrower. And you have these participants now that have a solid reputation in the space and have the relationships to bring deal flow to a platform like that. Whereas 2 years ago, it would have been inconceivable.
Right. And then I guess just moving forward, what are the next milestones for Maple Finance? Is that to decentralize that sort of delegate's responsibility, or something else?
Yeah, over time, we will decentralize. We will progressively decentralize that, and that will be something that's determined by the holders of the governance token, and through a governance process mediated through the DAO. But the more immediate milestones to pay attention to, and there's certainly a few of them, that next week we'll be launching the token through a balancer pool. So balancer being, another sort of decentralized exchange. So that'll be around Thursday, 6:30 a.m. Australian time. And then the following week, we would be launching the protocol on mainnet. And we're really excited. We'll have our first cohort of borrowers from the market making and trading fund space coming through. Of about 15 million. So if people want to follow that, then they can hit us up on Twitter.
Yeah, cool.
Or follow our blog articles.
Yeah, and I mean, just to bring it back to Blockchain Australia, a lot of the conversations this week have been around the idea of, what will it take to get institutions onboarded to public blockchains like Ethereum? It's been a reoccurring narrative. I guess the question and the take that I have for you is, what will it take to get non-crypto native institutions to borrow from a crypto native solution like Maple?
Yeah, it's a good question. So I think you kind of start with Clayton Christensen's Innovator's Dilemma. So we start building where people have the greatest need. These are crypto native institutions, and then progressively you build out. Now, what is really going to be required? So the first non-crypto native institutions, of which we're already starting to talk to some of them, that are quite interesting, are fintech lenders. So particularly lending companies who are doing similar products to Pipe, where they would provide capital for marketing and ads and stuff to SaaS and e-commerce companies. They are already looking at using Maple to potentially support a capital markets program or replace existing capital markets programs. And then the other one will be those SaaS and e-commerce style companies, because you have solutions that are increasingly becoming available, like PayPal, like Square's Cash App, like Visa partnering with Anchorage, where they're increasingly going to take payments from customers in crypto, and so they will naturally be able to start to manage their liabilities and their capital in crypto. But I think we're going to see enough growth in the crypto native economy and more corporates coming to participate in that we won't have to worry about that at all. We already have a runway of over 40 million of borrowers signed up.
Yeah, it definitely seems like crypto is slowly being exposed to the wider audience as to how rapid the innovation is occurring in here, and it's not an opportunity to miss for some of these, especially the fintech companies like Square and whatnot. It would almost be against their ethos in a sense to go against this new wave of financial innovation.
Yeah, it'd be like when Facebook made the decision to pivot to mobile as a means of distribution. It's like the first companies that do that with crypto are going to enjoy a significant advantage. I was talking to a company during the week that makes a checkout option for people to start to pay for items on Amazon with crypto, for example. I mean, you can imagine that the first companies that integrate with that are going to enjoy a significant, competitive advantage over their peers.
Yeah, agreed. Well, that's pretty much it for all the questions that I have. Are there any questions in the chat? Anyone who's watching this right now, feel free to drop some questions. More than happy to ask Sid. Don't be shy. I mean, in the meantime, Sid, where can people go to find you if they're interested in keeping up with yourself and also the release of Maple Finance and the token that you're offering?
Yeah, definitely. So definitely, we're probably most active on Twitter. We also have a LinkedIn presence, although it's probably not as large. But we publish a blog, and what I'll do is I'll actually share a link a bit later to an article that we published about how people can sort of get involved in that balancer pool and then move towards participating on the platform once it's live. So if you hit us up on at Maple Finance, I'll see if I can grab the Twitter link, and then you can also follow me on Twitter as well.
Yep. So we've actually got
a question
in the Q&A from an anonymous attendee. When Moon? Yeah. I mean, for those that are listening and not really sure on the context of that, that's kind of a crypto inside joke of like referencing the pump and dumps that we see and whatnot. So when Moon is just sort of alluding to the fact that tokens have recently been, going upwards. Well, we've actually got
put out Twitter link. It looks like we actually have a legit question. So in terms of the crypto lending space impacting on their current lending customers, so I'd say probably banks already perhaps underservice new tech companies and the like. I would say that they tend to be largely focused on like residential mortgage lending and also I guess credit cards and stuff. So I would say you wouldn't see a significant impact on that line of business in the near term. Instead, probably what it will look like is gradually the sort of tech customers, particularly at the institutional level, the market will shrink for big four banks as those institutions start to tap into a more global global capital market. But what you actually may find is that some of the banks, could end up being pool delegates down the track on Maple. I mean, that we're already sort of having interesting conversations with a couple out of Europe actually, and I guess those banks then enjoy a first mover advantage in getting to global tech companies and a more scalable capital markets program.
Yeah, that makes sense. We've got a couple more questions coming through the Q&A. The first one is, what sort of different theses can debt pools have? Pool delegates can obviously specialize in certain areas. What excites you here?
Sorry, could you repeat that one again?
Yep. So what sort of different theses can debt pools have? Pool delegates can obviously specialize in certain areas. And just what sort of generally excites you in that space?
Yeah, so I think that's a super interesting one. I would say probably broadly the three areas of differentiation that I've considered would be geographic regions. Like, could you have a pool delegate that's perhaps focused on North America or Europe, or even like an emerging markets one? That would be super interesting. The other one would be sector specific focus. Like, could you have one that's focused on crypto miners? Could you have one that is focused on, trading funds and market makers? Could you have one that focuses on, those first e-commerce and SaaS companies that come into the space? Then the other gradient on which they could pursue differentiation would be risk grade. Like, could you have a high yield, a high yield pool? Could you have one that is focused purely on, institutions that have more than $1 billion worth of assets? That would be a much lower risk one, but also a much lower yielding one. So those would be three areas I can think of.
Right. We've also got another question from Matthew here. Thoughts on TrueFi and other under-collateralized competitors?
We've got a very well-informed audience. So TrueFi has a single pool of borrowers. They also rely, so it's probably less efficient in that you can't have different pools pursuing different strategies. It also doesn't give, so I would say one of the advantages we give to borrowers is they get the best of like an OTC style experience, in that a borrower comes to the platform, they get confidential, after creating the request for quote, they get confidentially assessed by a pool delegate. So they're not doxing themselves in the same way that they might have to on TrueFi. And then the other element is they can get feedback as to the likelihood of the loan being approved and whether they need to adjust their structure at all. So with TrueFi, they would create a request and they put it out to the community and they wait 5 to 7 days to see whether it gets approved. So that's like actually hugely inefficient for most institutions. Then the other element is that for people lending or providing liquidity through TrueFi, they actually have to invest the time to assess the quality of the borrower, and most people probably don't have the inclination or the expertise. I will wrap this up in about 10 seconds. Whereas on Maple, it's the pool delegate doing that, so you get a set and forget solution. So it's just much more efficient from a borrower's perspective. A lender's perspective.
Awesome. Well, thank you so much for coming, Sid. That's no dramas at all. Just up next is regulating and facilitating crypto assets within the financial services framework. An extremely important one. Would recommend hanging around for that for sure. Thank you so much for watching, and we'll see you in a bit.
Thanks, Jack. Thanks, everyone. See ya.
Yeah.